First of all, IPA, it's in our DNA as far as small business entities. We're very closely aligned. Why? Because our members essentially are the accounting practices that provide advice to this sector. I'm not going to cover the environment too much because Jenny's already mentioned a few of the things I had planned, but just a few points. Cost of compliance, nothing's really improved dramatically. It's always going to be an issue for this sector. We've just recently had the election and there was a bit of a bidding war as far as what both parties were offering this sector. It was good to see that that some attention, some love was being directed towards this sector. Things like superannuation. And one of those things that Jenny put up was the fact that superannuation at the moment, it's not part of your quarterly reporting. It gets done after the BAS. So a very simple measure would be just to encapsulate that into the quarterly reporting. There's also the super clearinghouse. One of the promises was to extend that body to also look after not just those employers less than 20, but raise that number to 100. So effectively, most businesses would be able to outsource that time-consuming task. There was also small asset write-off, and I think there was another initiative was that small business report to the government annually with respect to BASs, and we had concerns over that, but obviously a lot of attention bestowed on the small business sector. As Jenny mentioned, we're looking forward to some positive announcements under the new incoming government. They're making all the right noises. Bruce Wilson is the small business minister. He actually is in cabinet, so effectively everything has to go through Bill. So we're expecting Bill to be the protector of this sector. As Jenny mentioned, very important structural deficits that Australia is experiencing. And we've seen that to date with a lot of the reviews. Every review that deals with taxation, and taxation is one of those regulatory issues that most businesses have to deal with. In the opening paragraphs of every review that's been done to date, recently, is this requirement that it must be revenue neutral. That effectively handcuffs progress. And rather than look at holistically what is wrong with the tax system, you've got these very mutually exclusive reviews that are hamstruck with this obligation that it can't cost the government any money. And why we experience these structural deficits, I think Jenny referred to terms of trade. It was quite obvious that we were going to end up in this position because of terms of trade. We had too much reliance on favourable terms of trade, which we may not experience going forward. So revenue neutral outcomes are very much a problem. I think you have to spend money to save money in the end, and hopefully the government looks at it more from a holistic approach rather than specific areas. We know what's wrong with the tax system too. We've just recently had the Henry review. It's basically telling us what served us well is not going to serve us well going forward. That's quite simple analysis. There's too much reliance on direct taxes. Now, what's wrong with direct taxes? Well, the problem is it takes away a lot of incentives. The government's looking for productivity increases, so taxation is one of those areas that it's a pretty powerful lever. If you want to get people to do certain things, then taxation is a good starting point. So that is why the future review of our tax system is very important, just from productivity alone. So consumption taxes, I know there was much debate about GST, but it is one of those indirect taxes that could serve us well. So we're looking hopefully at that white paper that the government's announced going forward, that they're not going to take the GST off the agenda, and it'll be part of that forward review. I'm not going to go into a lot of detail in our position, just touch on some of the micro things that that could improve the SME landscape from a regulatory burden, and the main one being taxation. There has been, contrary to the UK experience, there has been a lot less activity in the small business sector. A lot of people have exited the marketplace in the SME sector. I'm sure Peter's going to tell us how many people have vacated the space. So essentially what we would like to see in the short term is something along the lines of a simpler tax structure for small business, a concessionary tax rate. This is our wish list. The contractor rules, very much one of those regulatory burdens that's actually strangling the marketplace, and in particular FBT and Division 7A. So a simpler tax structure for SME. At the moment, you look at what we have at the moment, and to get certain outcomes like asset protection, retention of profits, access to CGT discount, there is no one structure that's going to tick all those boxes. And it's not uncommon for even a small business to have 3, 4, 5 entities to get the right combination that gives you a tick in all those boxes. Now that's just ludicrous. As soon as you have 5 structures, complexity, costs. Why? Because we don't have a natural business structure that caters for that size entity. So many of the problems would disappear if we had something that was a bit more business friendly. So we didn't have to, a small business didn't have to set up a partnership and then discretionary trusts underneath it and then some corporate beneficiaries. I mean, that's just why do people do that? Because it's the only way they're going to get asset protection, the only way they're going to get CGT discounts, the only way that they can distribute some of those profits, and also succession planning. So that's one of the problems we foresee that could be, we could eliminate a lot of the regulatory burden just by looking at a simpler structure. And there is already overseas precedence for this. I mean, in America they have a small company which has limited liability, gives you asset protection, gives you the ability to distribute profits. It's there. It's not rocket science. It's not too difficult to put something in place that does that. Why should we grant small business? What's so special about small business that they should be deserving of a tax cut? Well, essentially 2 things. The regressive nature of compliance costs. I mean, regardless of how large you are or small you are, you're up against the same sort of rules as a large entity. So therefore, I think someone quantified what the cost to, on average, for a business up to 100 people would cost just to comply with tax laws, and I think the figure was roughly around about $32,000 just on average to comply. So because of the regressive nature and because we want to reward entrepreneurial activity, we think this sector is deserving of some compensation in the form of, we're not saying a lot of compensation, but some compensation to effectively reward someone for taking on business risk. It's in, I think, the nation's history, not history, but interest to actually reward people that risk capital. I think that mindset would be very good if we were to encourage people to take on business risk. It would be very simple to implement. I mean, most of you who practice tax would be familiar with the entrepreneur tax offset. Very simple system. All you need to do is identify what part of your total income came from business activities. It's as simple as that. Then the tax system, we have progressive rates of tax. It would then give that business some relief for the fact that it is in business. We're talking not passive income, we're talking business activity, something that is done in a business-like nature, not rental businesses, because that is what is referred to as passive income. So we're going to reward people for taking on risk, employing people, and they should be encouraged to do so. If you ask small businesses what is the one thing that they most look forward to, I think it's just a simple lower rate of tax and do away with the the plethora of tax concessions. Most small business don't understand what is actually available. Maybe the small asset write-off, yep, because it's simple. You go out, spend some money, and you shorten the time period for getting some of that back through the tax system. But everything else is just they rely on their trusted accountant to come up with some strategies. But ask most small business, I think it's quite obvious what they'd rather prefer. Now, in this fiscal environment, we can't propose something that we can't pay for because our terms of trade aren't as good as they were. So we've identified some places where savings could be made, and the small business CGT concessions are wonderful. They're probably too good because they're uncapped. So if you have had a profitable business, then you can take advantage of some of those concessions. But a lot of small business won't have that pot of gold at the end anyway. So whilst it's good, it's too good, and not many get to utilise it because they're not going to get much goodwill when they sell their business. So what we're saying is direct some of those funds to the startups and those that are running the business who are finding it quite difficult. So you redirect the timing of some of those benefits as well. And there's a host of other small business concessions that could also be exchanged for a lower rate of tax. Probably this one is the one that creates a lot of friction in the marketplace because we've got the regulator. The main regulator in this space is the ATO. Now, whilst the commercial world has taken on outsourcing with gusto, we've got some pretty arcade, inflexible tax rules that are smacking in the face of someone who likes to be a contractor because that's what the business world are asking for. So I know this will be part of Bruce Wilson, our Small Business Minister's brief. He already has made a public statement. He's basically told the ATO follow the rules. The ATO do have some discretions, but unfortunately, when you give a discretion to the ATO, there's only one way they're going to apply it, very strictly. Funny that. So if you were to look at these contractor rules, I think it's going to serve the growth of contracting very well. So I think more needs to be done. And in fact, Henry Review is earmarked that there should be a broadening of the PSI to cover all entities. Because at the moment, if you're a truck driver and you own your own truck, you don't have to worry about PSI rules. It's simple, because it's basically saying that because you're deriving some of that income from a piece of equipment, then PSI, that's a bit ridiculous. If you're the actual driver and you don't own the truck, then you're stuck with PSI rules. So they're too hard and fast, these rules. They're very inflexible, and I think some love needs to be put into this area to look at it. And again, we're looking at productivity improvements. I think this is one area where we should be encouraging genuine contracting arrangements rather than putting up brick walls. Simpler tax rules. Most of you are probably familiar with fringe benefits tax. It incurs the highest compliance costs, and it doesn't actually generate a lot of money. I think in totality, FBT brings in $3 or $4 billion out of $300 billion. So in essence, it's not a big tax revenue collector, but the cost to actually bring in that $3 or $4 million is just horrendous. So there is considerable scope to reduce the compliance burden. One of the big things that could be done to fix this whole thing is just to push the incidents downstream. Rather than it be an employer problem, you push it down to an employee. And it fixes a lot of things along the way, because then it gets employers out of the compliance burden, which is a good thing. Then if someone has been given benefits in lieu of cash, And if that was recorded at the employee level, then everything's apples and apples, rather than at the moment employers have to go through this the system of grossing up, or actually complying with the laws, working out what is subject to FBT, then going through this complex grossing up process, and then you've got these horrible interactions with GST. And then on the payment summary, the employers put down this quasi number that represents what it's worth, what that benefit is worth. So it could be quite simple, just push the valuation of that benefit down to employee level. Then all the remuneration that's received by that employee is in that one return. Problem goes away in a lot of aspects. And we're well supported in Henry that the transferring of the incidence of FBT downstream would make a lot of sense. And then you'd have this neutrality of treatment of cash and non-cash. Then things like whether someone's entitled to social security benefits, it all becomes very straightforward as far as knowing exactly what that person receives, regardless of whether it's received in benefits or cash. Okay, Division 7A is the other nightmare. I think at our recent tax forum, it was described as nightmare on Elm Street. I think it's not too far wrong. It is horribly complex. It's one of those areas that practitioners have to deal with because I mentioned that earlier on about the structure. A lot of small businesses, to get some of those tax benefits, have got a trust somewhere in their structure, and they've also got a corporate beneficiary. So Division 7A makes a mess of what's been normal practice in the SME sector, in the sense that you had a corporate beneficiary that received the money from the business, but then it ploughed it back into the business because small business need working capital. The ATO has done a U-turn, and it's now treating that lending money back to the business as something evil that needs to discouraged rather than encouraged. So we're still waiting on the government to actually come forward and actually make some comment in this space, but it hasn't happened to date, so we're basically saying that it would be good if the incoming government also looked at Division 7A. There's already a review that's been completed, so the incoming government will have the Board of Tax to look at their recommendations on how to fix this problem. Again, there is a requirement for the business to loan that money back, for the business to actually repay that money back that's currently being used for working capital. Now that's going to strangle a lot of businesses going forward. So the problem is a ticking time bomb for those in the SME sector.